Welcome, everyone, to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen. We're getting ready for the trading week ahead. Last week was a pretty good week. We're up 2.5% for the averages. This week we've got mid-month seasonality, third Friday of the month, options expiration. We're going to go over that shortly and add a little bit of macro, add some economic reports, and it should be an interesting week. So let's see what Rob has from his perch, what he sees, and go from there. Good evening, Rob. How's everything?
Not too bad. Let's just review with the context of as we rolled into sort of the middle of August, we had alerts about a potential change. We still had seasonality supposed to be, little robust for the 5 last days of August, but that was centered on the first few days of the last 5 days, meaning that it decayed down to the last day being slightly negative. We saw that we had some enthusiasm before or just as the window was starting on the first day of seasonality, and it really had robust performance. And then Friday was down, and then we were down since then, rolling into the first day after Labor Day, with seasonality still being down. So September 1st, 2nd, and the 6th were down sessions. And then we had a little rally for Wednesday, Thursday, Friday. So, whether that's sustainable or not, we have to look at a number of things, including our indicators. So we do see that the US dollar has gapped down since it opened. The Sunday futures, they open at 6 p.m. Eastern time, 3 p.m. Pacific time. So since then, the US dollar had to move down. The euro had to move up, and that's because the euro inflation is running really hot, and everybody's expecting, based on banter and as well as, this is pretty obvious that they're going to have to do something about it. So they're expecting rates to go up, and that's why the euro is responding positively. And that's putting some pressure on the US dollar, because if the US dollar is at a premium and the euro has, dipped below $1, so significantly discounted, what an opportunity to, say, short the US dollar and buy the euro. I mean, it might not work out, but that's how professionals look at things, is like mean reversion, mean reversion, mean reversion, mean reversion. So I think that, that's a potentially good trade, which is going to, change a little bit some domestic companies and, multinationals. It changes the landscape a little bit when the US dollar pulls back. So we're now in our 4th day of decline on the dollar since it really peaked. Okay. We don't know if it'll hold. We don't know if it'll change, whatever, but that's what's going on now. So let's run through just some of our futures and give you some perspective here on what's happening. We had, as the US dollar had sort of gapped down, the stock market had gapped up in terms of the futures, and it's been sort of pulling back since that. So if you look at where we've come from here, we really spiked, major gap. This is very different than some of the other days we've seen where we kind of just open benign and rally a little bit. We really gapped, and now we're pulling back. So the Dow Jones futures are still up 110 and up 0.34%, but way down from the highs when we opened. S&P 500 up 17.25 or 0.42%, again, way down from where they were. NASDAQ as well, up 75.5, 0.6%, again, way down from the highs. Russell up $5.4 dollars. We are 0.29%. So it looks like the NASDAQ 100, being technology heavy, no financials in there, is performing the best so far. China is responding positively. to the move down on the dollar. There's more stimulus going on in China, etc. So that could be important. The VIX is still at 23.85, so still over the 20 mark. But if we see an up open and the market wants to build on that, I would expect the VIX to decline. So it could be a risk-on day on Monday, just the way things are setting up. And Wednesday is the first day of seasonality. I'll let you comment on that in a moment. Just looking at metals, pulled again. Most of these things have pulled back since the futures opened. The metals have pulled back, and the energy has pulled back. So we'll have to see. When you see this type of behavior, you got to really take it into the next morning and look at things pre-market. What is the market telling you? What are the indicators? Is it risk on still? Is it risk off? Okay, over to you. Wednesday starts mid-month seasonality. What do you got for us?
Yeah, so we have two good events this week in terms of the almanac. We have Wednesday mid-month seasonality, which is a couple-day window, and then also that third Friday. Of the two, the third Friday of the month has more of a robust signal. I mean, it's mid-month seasonality for the spider is minus 0.14% for that window, but for the Friday, it's minus 1.02%, right? So it's expected to have a pretty significant down day on Friday and slightly down day over the mid-month. So when you compare that to things like the Russell is expected to do slightly better. It's actually positive 0.02. The Qs are expected to do worse than the spider for seasonality, and the diamonds are expected to be positive. So of the four averages there, maybe be longer things in the Dow Jones or the Russell 2000, and shorter things in the Qs themselves in the NASDAQ. Now, some of the sector ETFs within that for mid-month seasonality to be longer things like oil, biotech, XBI, even the ARK-K complex, ARK-KK, SMH, which is chips, financials, energy, and even some of the individual big cap stocks that are in there, like Tesla, 2.01% for the mid-month seasonality, Facebook 1.01, Nvidia 0.62. So there are some big cap names that you could go longer, and shorter things like staples, silver, even Apple, right? So that's for the mid-month. For the third Friday of the month on Friday, you can expect a pretty big down day for the spider, minus 1.02, and that's worse than all the other averages. The best would be the Russell 2000, and within that, it shows to be shorter things like basic materials, energy, and industrials, and longer the rest of the ETFs. So it's kind of a mixed thing there. You could pick out some sectors to play against each other, but it is a relatively weak week and a weak Friday for sure. And then we do have some economic reports mattered throughout the week. Inflation will be at the top of people's minds again, because Monday there's a New York Fed inflation report. On Tuesday, there's core CPI, consumer price index. Wednesday, producer price index. So that's going to keep inflation data there. And then Thursday, there's jobless claims that'll show if the economy is really weakening or recession's likely. And then Friday is the consumer sentiment report. Shows you how they're feeling. So
we also have retail sales for Thursday.
Yeah, retail sales also.
Right, and Philly Fed. So the consensus reading is down on both of those versus what was previous. Yeah, it's interesting. It's a solid week packed full of stuff. I mean, I find that over the last 19, 20 years, I guess, since 19 years since 9/11, that there's a little bit of concern going into the days surrounding 9/11, whether there's going to be some other event by some, adverse nation somewhere doing something. And when we come out of it and nothing has happened that's, bad on the terrorist front, usually we rally. I mean, that's been my experience, is a little bit of concern before, but we had a rally last week. But nonetheless, I mean, if nothing happens over the weekend, then it can be like, okay, good, and you get a bit of a relief rally. So it wouldn't surprise me to have risk on tomorrow or even into Tuesday. But of course, the CPI on Tuesday is going to be a big deal, right? I mean, the inflation is still, like you said, top of mind. So yeah, we're seeing stimulus in China. We're seeing raising rates in Europe. We're seeing, we've got a lot on the schedule for quantitative tightening in September. There's not a lot of great reasons to rally, but I mean, hey, people are headline driven, and we have seen some good reports of Ukraine taking some ground back from Russia, and so maybe people are thinking, hey, maybe there is an opportunity for this war to end, and Putin to be put in his place or whatever. I don't know, but I can't say that there's no reason for good news to come out, but we're in a time between now and the midterm elections when, there's a lot of overhead pressure, a lot of resistance to climb back up through on the market technically. And, these are historically not the better performing months. So September is usually the worst performing month of the year, and October is the most volatile of the year, and that's all in front of the midterms. Right? But we're gonna take everything in stride. We're gonna put it all together. A seasonality backdrop is important because it's what has happened in the past, and then we take it into what are the contrary things that may impact seasonality so that it doesn't play out that same way, right?
Yeah.
It's fine. It doesn't mean that it's a big deal to us. It's like, here's the context, here's what normally happens, and here's the new macro forces that we have to deal with that are putting an opposing force on this. So that's where we're at. I did notice that for hotels, occupancy rate was up 3.1% compared to the same week back in 2019, which was pre-COVID, right? We didn't have COVID until 2020. I mean, we may have had it, but I mean, it didn't really start hitting until New Year's on 2020. But if hotel occupancy is up, travel is doing well. So I would favor travel stocks. I would favor the hotel chains, things like that, even some of the casino stocks potentially. So just keep that in mind. In railroad carloads is up year over year, but the intermodal is down a little bit. Just keep your eyes, like there's a lot of other leading indicators. We call them leading indicators, even though they're maybe August information or whatever, but they can contribute to investors' positioning of capital, reallocating or whatever. And so each industry sort of has the metrics that people look to, whether it's seats, how many seats are sold on planes, how many hotel rooms are taken, how many carloads for, trains, how many sales for automakers, the retail sales. There's a lot of these type of numbers that come out, and they do contribute to investor flow. Okay. Good. So with that, we'll be done. We'll look to get our own homework done here ahead of Monday trading, and we'll be considering all these things we talked about. So good trading, everybody. We'll catch you here next week.
All right. Good luck.